JSW Steel, that's the stock which is in focus as well. And this is, again, on the back of earnings, the stock trading under pressure. In fact, the metal names actually are seeing pressure in today's session. If you talk about JSW Steel, the second quarter revenue and EBITDA actually beat estimates, though the margins actually took a hit amid softer realizations and higher inventories this monsoon season. However, the company is confident of a pickup ahead with production and capex plans firmly in place and expectations of a stronger domestic steel price by year end. Joining us is Jayant Acharya, Joint MD and CEO at JSW Steel. Jayant, welcome to the show, and always a pleasure to speak to you, and wishing you a happy Diwali as well. Let's start with what the Supreme Court order has done with regards to restoring Bhushan Power and Steel purchase. What would this actually mean for a JSW Steel now?
It's a very welcome order. The Honorable Supreme Court has given a very clear ruling rejecting the appeals which were placed before the court. They have reaffirmed that and held up the NCLAT 21 order approving the resolution plan. They have also acknowledged that the company has improved post our takeover in terms of employment, in terms of expansions, etc. Which has been a big positive for the ecosystem in that area at large. We very much welcome this order because we were also of the view that we have really contributed to this asset and have brought it around. And this is a very welcome ruling from the Supreme Court.
Okay. So what are the financial implications of the order, if we can understand that aspect?
Yeah, so implication is the resolution plan has been approved. So we are going ahead with business as usual. No impact on the financials, which, no refunds required, etc., whatever was there in the earlier ruling.
Okay. And Jayant, would you be sticking to your previous FY26 production outlook at 30.5 million tons? And will that surprise the market on the positive side otherwise?
So we are on track for meeting our guidance. Just to give you a little bit of a backdrop, you would have seen our Q2 results have been driven by higher volumes on the back of good demand in India, as well as a ramp up of our JVML operations. Dolvi and BPSL also doing quite well. So you will see the full impact of the JVML capacity coming in the second half. We have, however, also taken a shutdown of one of our blast furnaces at Vijayanagar for augmenting the capacity by 1.5 million tons. And there will be some incremental other capacities which we would debottleneck. So we expect to add about 2 million tons, which would come towards the end of this financial year. So second half, from the current assets, we will be able to generate good volume. So I'll say we'll meet our guidance because of this particular shutdown period, which is there till February. From a business environment point of view, the second half is seasonally a better half, and therefore the demand drivers will also be positive.
Okay, so demand drivers will be positive. Now coming to the net debt, that has come below that 80,000 crore mark as well. What's the outlook looking like going ahead? Is there further paring that will happen in the second half of FY26?
So yes, you're right. The net debt to has come down to about 79,150 odd crores in this last quarter. What is good is that our net debt to EBITDA, which we are focusing on more, has now gone below 3. It's about 2.97. Our net debt to equity is below 1 and has been below 1, has improved actually to 0.93 or so. So from the ratios point of view, I think we are good. We continue to monitor this and see that we invest in a prudent way as we expand our capacities. If the environment continues to be positive from a demand and pricing point of view, I think we should be able to improve the net debt to EBITDA in the second half of this calendar year.
Okay. Jayant, considering the EU tariffs at 50%, do you think the domestic demand will cover what is needed for your business then?
So if you were to look at the overall calendar year demand, I think by and large, the incremental demand of the rest of the world. So China demand has actually come down. You would have seen that. And the rest of the world is showing improvement in demand. And major chunk of that improvement is coming from India. So India is the fastest growing market as far as steel demand is concerned, backed by a good economic growth. We see that continuing for, I would say, a decade or two as India builds its infrastructure, manufacturing, renewable energy. I think a lot of steel will get consumed in the country. So India demand will be the main driver. Our capacities, which we are creating in India for our growth, is primarily focused on India. You would see that our exports are also in the range of, have been hovering in the range of 8 to 10%, and it should be in this range as 90% of our demand of our capacity is being allocated to the domestic market.
Got it. Very lastly, Jayant, one question I have for you is, you've partnered with a Japanese steel company and a Korean steel company, and there is kind of rivalry between the two. How do you see this actually adding to your business?
So JFE and JSW have been partners for a long time. And I think we have already been in the joint venture, or let's say not in the joint venture, but in partnership for more than 15 years. We have now also entered into joint venture for CRGO production, getting the technology into the country and putting up the facilities to produce CRGO from iron ore to CRGO for the first time in India. JFE has been a very good partner, and our collaboration has helped us to establish the automotive business in a big way, the electrical steel business in India also through technology support and assistance from JFE. As far as POSCO is concerned, again, POSCO is a very strong company, technologically very advanced, one of the most efficient companies in the world in the steel sector. And a collaboration with them also, will be beneficial for us from a technological standpoint and for POSCO from an India entry standpoint, because in the past, they have not been so successful in the entry into the Indian market. We provide that connect to the Indian market, and we should be able to, with our capabilities to execute projects quickly, we bring that to the table, and with the technology benefits which POSCO will bring in, I think it's a win-win joint venture for both.
Got it. A win-win joint venture for both, and that's going to be interesting to watch out for. Thank you, Jayant, so much for joining us on the show. Always a pleasure to speak to you on NDTV Profit.